Hello, guys, and welcome back to another post-market analysis of Nifty and Bank Nifty. So, what we have here in front of us is a Bank Nifty. Sorry, it's a Nifty chart on a daily time frame. So, let's start with a time frame today. So, what we have here today is a small green candle. Okay, and this green candle's real body is within the real body of your previous day's price action, which means that this is a harami candle, which is also called popularly known as inside candle formation. So now this becomes interesting because from here there is a couple of ways. Okay, so there are a couple of ways to look at this. Okay, now if this gives breakout above this, now these two blue lines are nothing but the high and the low of this inside candle formation. So now it's very important to notice which side is the breakout going to happen. So if it gives a breakout towards the upper side, then it's a good sign for the Nifty that it is likely going to be go towards the upper side. But if it gives a breakout towards the downside, then we have to expect some downside momentum and correction. And before that, yesterday's this is yesterday's candle, and today's price action is completely within this yesterday's range. So whenever you have such a trending day, the next day is traditionally it's going to be a little sideways momentum. You can't expect the big momentum again. So that is what is happened today. And the key point here is, see, yesterday these two candles put together, it's this is also telling us that there is some trouble, because this pattern is called, this is little close to a candlestick pattern called counter attack lines, okay, in Japanese candlestick patterns. So this counter attack line is a bearish sign in the market when it is coming at an all-time high. But that can be taken down, that wave can be taken down if you see a breakout above this. Now, before sorting of this pattern, okay, while dealing with this pattern today, again we have happened to see another pattern, inside candle pattern, which may put a halt to this momentum, this upside momentum in the Nifty, or it may come down also. But if it starts giving a breakout towards the upper side, then we can also expect a momentum towards the upper side. So the key thing here is, on a daily time frame, you need to wait and see which side is the closing going to be. If you see close above that, then we can expect little more of momentum in the Nifty. But if you see Nifty getting closed below, then we can expect some pullback. Okay, so now I'm removing these two lines. So for any reason, if Nifty has to come down, where is the next support? This blue line, okay, and this zone, okay, this is going to act as a support. And also because you have this gap here, remember, gaps are nothing but uh, you know uh, they are important zones which will act as support and resistance. So if you are encountering the gap which is coming which is at the bottom, this is going to act as a support. And if you are encountering the same gap from the bottom, it is going to act as resistance. Okay, so this is the picture about the Nifty on a daily time frame. Okay, let's now quickly change our chart to the Bank Nifty and see how Bank Nifty is looking on a daily time frame. Now here we have the chart of Bank Nifty. Unlike Nifty, excuse me, earlier Bank Nifty showed us trouble here. Okay, so this is April 8th candle. Okay, so this April 8th is the candle where we have seen a doji at a very important location, that is at the resistance area. But after that, yesterday, you see, even though it is a red candle, we have suspected this because this is even though it is a high, it has created a high and it has given us a higher close in the Bank Nifty yesterday. We have suspected it because it is a red candle. So these two candles, the doji, okay, excuse me, let me remove that. Yeah, so these two candles, so until yesterday it was looking little negative in the Bank Nifty, these based on these two candles what we are seeing on the chart. But today what we have seen is it's a surprise. We have seen a close above the yesterday's high, and that's not only yesterday's high close, but also we have seen that's the we have already touched and we have crossed 49,000 mark today in the bank nifty, and we have seen closing at 48,986. So this is all time high for the all time high close for the bank nifty ever in the markets. So bank nifty is looking bullish, but what is little suspective here is it's good that the it has given us a breakout above this previous day's high. But the thing is, since there is no strong pullback that we can see, the only strong pullback is here. So from that point we have started rising up, and here we have seen three candles next to each other, and from there we have again started to rise continuously. So there is some pullback which is expected, okay. But the candlesticks are telling us, giving us a different story altogether. This is a positive close. This has got a higher high, higher close, higher low, and we have also seen a higher opening, and bank nifty is trading at an all-time high, okay. But you may see pullback at any given point of time, because on the nifty, see, yesterday till day before yesterday, bank nifty was something which has to be under your radar, because the bank nifty was looking troublesome at this doji, okay, which was giving less confidence for the nifty. So in the nifty chart, this is the nifty chart, in the nifty chart where you have seen a positive close on April 8th, okay, I'm talking about this candle. The same day bank nifty was struggling with the doji candle on a daily time frame, okay. And see, as from yesterday, we have seen this counter attack line, and we are seeing inside candle formation in the nifty. But in the bank nifty, we have seen a positive close. This is the nifty chart, okay. So bank nifty is definitely looking positive, and a pullback from a very long time is pending, even though this is looking bullish in all kinds of eh, uh, uh, okay. So yeah, this, even though this is looking positive from all scenarios, what is little what to say, um little problematic with this momentum should be not from the bank nifty, but from the nifty point of view, because there we have seen an inside candle formation. Also, a thing to notice here is bank nifty is at a very important round number, that is 49,000. Okay, so 40, since 49,000 is a very important round figure, then because of that also you may see some resistance. That is the only resistance that we can see, because on the left you have nothing to take as a reference. This is standing at an all-time high with an all-time close. The only resistance in the bank nifty, if you look at the bank nifty chart alone, is only this 49,000. But apart from that, the companion for the bank nifty, your nifty's chart is looking not as confident as the bank nifty, because of this red candle and an inside candle formation. But once if you see this, once if you see a close above that, then here also you could expect some good momentum towards the downside. And also here, when you talk about the round number, it is 22,800. That's the nearest round figure for the nifty, which may act as a resistance in the case of nifty. Excuse me. Yeah. So now let's quickly change our chart to our intraday time frame, which is 5 minute time frame, and then let's try to see. So this is the Nifty's chart, and all these levels are marked from yesterday. These are trading opportunities that we discussed in yesterday's video. So here in the Nifty's chart, we can see that Nifty opened at 22,726 level, and after that immediately you have seen this candle. This is almost looking like a hammer. So from here, it has started, see, it has initially seen a downside momentum, right? Exactly from that point it has started rising from there. So what we have done is we have taken the big portion of this and drawn that as the support area. So what we should expect now is either a breakdown from there, from this location, when the price is there, when the Nifty is there with the proper confirmation, or a failure here at this location, so that we can take a trade towards the upper side. But before doing any of that, what you should remember is your yesterday's momentum. See the kind of momentum that we have seen yesterday. Okay, so from that point, it's a pretty straight momentum towards the downside, almost till closing. Okay, in the last hour of closing, we have seen some sideways momentum. So when you have such big a trending day, see, even the day before yesterday also, okay, the day before that also has given us a very good momentum towards the upper side. So that when you see market opening in this range, then you can expect some sideways momentum. But what we have done so far is drawn this support area. Now what we can do is, after this price action, we can also draw a resistance area based on these two reactions from these two candles. Okay, so let's closely observe. So here you have seen a green candle. Okay, here you have seen a green candle there. Okay, so from there, if you want to take a trade towards the upper side till here, see, first of all, it's not telling us, it is not any strong candlestick pattern by its own, these two candles put together. So that's really not a good place to take an entry. Whereas here, yes, this is close to a piercing pattern. These two candles, we're talking about 10 o'clock and 10:05 candle, these two candles put together, it is called as a piercing pattern. But then again, since you have this as your high, okay, and your risk is almost little more than your reward. Okay, so that's not the good scenario. Let me show that once again here. Okay, so your risk should be below that, and your immediate reaction is that. But if you are a liberate trader, then your target should be that. But in this case, if you see this, I'm taking this as the target line, and that should be the case with you too. You should be taking the starting point of the wick, not the ending point. Okay, that should be your first target. So in this case, this candle 1105 candle, if you see this doji candle, has reached your first target. It has almost reached your first target, but then failed. Okay, but if you see the risk versus reward ratio, we thought that the risk is more, but it is giving us a good risk versus reward ratio as well, 1.7, sorry, 1.5 times. Okay, but what's more you see, what's more important here is, when next time when the Nifty is here, it has given us a breakout, but after that we have seen a failed breakout there. Okay, so a failed breakout there, and also a green candle there. Okay, so this is a variation of piercing pattern, and that is coming at a very important location. And most interesting thing here is your risk versus reward ratio, because your risk is so small now comparatively. And where should be your first reward? Your first reward can be here if you are little conservative towards your target. But if you are little liberate, then that could be your uh, target. So in this case, both levels are taken down, so it's a good momentum. So this entire momentum could have been captured. And what's giving us more sorry, excuse me with this. Okay, yeah, what's giving us more confidence is this candle 1150 candle, which is a hammer candle. But the thing is, with this hammer, by the time this hammer has formed, you are too far from your stop loss. So that's one point that you can consider. And see what happened when the price is there, when the Nifty is there at your resistance area. Let me remove this. This is actually the resistance line that we have drawn, so let's make it as red. Yeah, so after this breakout, we haven't seen any positive confirmation. We have to see a second green candle after that. That is not the case here. And see, this is a bullish engulfing pattern. See, these two candles is a bullish engulfing pattern. So do you want to take a trade there? Yes, if your risk versus reward ratio uh, is allowing you to do so. But in this case, if you are entering there, this is your immediate high. Excuse me. so you don't have a greater risk versus reward ratio there. So that's why let's take it down. And here you have a big candle. This is a bearish engulfing candle. So one might say that, why can't we take a short position here that is going towards the put side? You can definitely take, but look at your risk versus reward ratio. Would you want to really risk this much of your capital, okay, just to achieve this target? No, technically it's not sounding good, right? So it's better to wait for another confirmation. Okay, so and here in this case, by now this can be your target. So that could have been your target, and this is your next bearish engulfing pattern. But look at the close of your bearish engulfing pattern. It is hardly giving us a confirmation, because we need to see a little this candle close should have been little below, so that it could have given us enough more confidence to get into that trade. But then again, okay, in this time, in this duration, okay, so you have seen another resistance area that is coming from this high, and you have seen a breakout from there. Okay, so from that breakout, we have uh, we have seen a pretty big green candle. Okay, and why do we have this blue line there? Okay, so that blue line is coming approximately from that point that we have drawn on a daily chart for our inside candle formation. So let me take that away. So this is a pretty big breakout. You cannot take any decision there, and moreover, you haven't seen any positive confirmation that you don't see any positive confirmation there. And by then, almost you are into the last half an hour of your trading. So that's it about the Nifty. We have gone a very in detailed analysis with this chart. Okay, now let's quickly change our chart to the bank nifty. So in the bank nifty, similarly, so we have a support area mark, and here we have the resistance area which is coming from this side. Okay, so here you have a very good chance for downside momentum. This is a bearish engulfing pattern, but then here you see where is your first target. See, a conservative target is this one. Okay, because from that point you have seen a very strong pullback. So one might have taken that as a first target. Those are saved, but those who have kept this as their first target, let me tell you, that's pretty high. Okay, so in such scenarios, what you should do is, because this is a pretty big momentum, okay, you see, you are this is the candle that's telling you that there is an opportunity, your 950 candle. So from there, your maximum, see, according to Fibonacci, this is your 50% target. So this is a less target for the kind of stop loss that you are looking there. So it's ideal to sorry it's better to mark your Fibonacci levels as well if your target is pretty far. Okay, and see what happens. See, and this is another resistance area that is coming from yesterday's price action. You see, exactly, we have seen bank nifty getting into the travel in the initial time. See, 10 40 and 45 candle, and these two candles are again a bearish engulfing pattern. We're talking about 11:05 and 11:10 candle, these two candles. Okay, but then your targets are very close, and you see the next real opportunity uh, is pretty far. See, some might also say that, see, we can draw a resistance area like this based on these two wicks. Yes, that can be done, and this is a bearish engulfing pattern coming at a very important location. But what's lacking is your risk versus reward ratio. That's more important than your location and your candlestick pattern. Look at the kind of risk that you need to take to achieve a target like that. That's definitely not a good thing to do. And here you have seen a breakout but no confirmation candle, and again here you have seen a green candle, but your wicks are very close, so no good risk versus reward ratio. And by then here you have seen a breakout and with a confirmation candle. By then you are in the last half an hour of your trading. So definitely that's not recommended, okay, if you are an intraday trader. All right, so that's it, guys. That's it for today's video. See you in another post market analysis video. And if you haven't subscribed to our channel, please consider hitting that subscribe button. Thank you.